Good afternoon, everyone. This is Chrisi from SolsticeATR and Vulcan Capital Research. Today is August 10th, 2019. I will be covering the market outlook for August 12th through the 16th, which is from Monday to Friday. And what I'd like to go is over all major indices and some equities for everyone in order to understand what just happened in the last week or so in this very volatile market. So I have first of all the combination of the Fortune 500 company, the NASDAQ, the Russell, and the Dow Jones Industrial Average all together combined for two reasons, just to show that the move when we came back from the high when we reset and all the noise happened from the Federal Reserve Board decreasing interest rates by quarter point, the tariff in the Middle East, on Iran sanctions, it drove the market, the VIX to a high, it drove market to a low, and we kind of got a good nice rebound from the low back up to halfway back, more or less. And where did we come to? The 50 simple moving average and the channel. We bounced back up to the 18 simple moving average, and we closed right at a very critical area, 38,128. Let's call it 38,200, which is very important area in the combination of those four instruments. That's on the weekly chart. And on the daily chart, we seem to look bullish because of that hammer, but there is resistance because we came back halfway back. Let's take a look at it. It's coming up. It's taking a little bit of its own time. Okay, let's just zoom into this area. We bounced out, remember, off the 50 simple moving average, and we bounced out almost off the 200 SMA, came back to the 116, missed the 50 SMA. And this was, I drew this, a couple of days ago. I had this minor one here. We had these two channels from prior. If you notice, we came back to the 50% retracement of that fib. And we stalled on Friday, came back to the 116, bounced up. As long as we're above 38,200, this is bullish. If it is below 38,200, be careful of it. Let's see what next week holds for us and Monday news coming out and stuff. So let's go break down one by one the instruments. I'll start with the RTY, which is the small cap. Here is the small cap on the daily chart. I'm going to just zoom into this area and kind of show what just happened. We came back to almost a double bottom, which is down here. We rebounded on Monday, Tuesday, Wednesday, and that was Friday. So we came back up, U-turned, and Friday was consolidation right underneath the 1530 area. We tended to close above the 1500, as you noticed. This is very critical area if we don't lose the 1505 area, 1510 here. If we lose it, we're going to head back down. If we end up clearing, the 1532 area range, 1535, we can come back to the 50 SMA, that would be the 61A, and eventually the 1560. This is the area I would like to see if we can come back, consolidate, and push higher. And if we end up losing and coming down, be careful of it, because the range of the high and low, we're a little bit underneath the 50 Fibonacci. This is your 61, this is your 38, this is your support 0, and that's your 100% retracement. Or we can put a 23% here and a 78.2 right here. Let's go down now to the Dow Jones Industrial Average, the YM. Oops. YM. Okay, let's zoom in a little bit. This is the Dow Jones Industrial Average. The Dow Jones Industrial Average had a new high, but I kept the old fibs on. I never changed them, which is okay. When I said, hey, be careful of the, coming back to that, filling up that area in here, we fell through it. We lost the 50 SMA. We lost the 116. We came back to the 200. We came back to the 25,000 area, 25,000, 32. This is a round number. It's very technical. Most of the trades, what did we do? We came back to 25,000. from 27,200 area or 27,000 back down to the 25,000, came back to the 50% fib, and we closed right above the 26,200, 250. That's very critical area for the Dow Jones Industrial Average. We're above the 116, still below the 50 simple moving average in the 18. In order to continue higher, we have to clear what? The 61.8, where we fell through those three candles. We had this oval here. We kind of came back to the consolidation, fell through to the bottom, started that move, and U-turned and came back halfway. So remember, we are in a critical situation, middle of the range. Watch what the market gives you next week. Don't be biased to being bullish or don't be biased to being bearish. Trade what we see. On the technicality, we came back and closed at 26,200. This is a very technical area, and this coming in actually from a prior high and a breakout before we even started. This line here coming back from a weekly chart, and I'll show you where it's coming from so you guys can get a better feel of it where I'm looking at. This is why we came back from these prior highs. Eventually we broke up and we got a hammer. We're sitting on the 18. On the weekly chart, we're above the 50, touching the 18. If we're going to continue, we have to clear the 26,750 in order to continue higher. If not, we come back to this side of the channel to continue higher. Let's go now look at the NASDAQ/NQ. The NASDAQ on the weekly chart, if you notice, we came back to the 50 simple moving average. We came back to the 18. We came back to the 38.2 fib and bounced back nicely on the weekly. Let's go look at the daily now on the NASDAQ. Let's just zoom in from this area. And this is a perfect professional visual for most active traders, daily traders, weekly traders, and swing trading. The support became the 200 SMA on the daily chart. We fell through the 50, fell through the 116 and the 18 SMA and came all the way to the 200 SMA. On the way back up, we cleared the 116, which plus the 38.2. We cleared the 50 simple moving average. Where did we stall? We retested the 61.8 fib from the high and low and closed a little bit right under the 7,700 or 7,650. We're still underneath the 50 SMA. In order for this to continue, we do not want to lose the 38%. We can create a little cup and continue higher, or if we break above the 61, look to see if that will act as resistance, because if you could draw a channel here, where's your support? 7,800. Because if we do a channel, we grab this line here to this one here, more or less. Come on, come back here. And where is it going to come to? This channel. So more or less, we kind of understand what we're looking for. We're looking for more or less of a technical move back up into this area. If we're going to come back, consolidate, hold the 38 and continue higher, or break through the 61.8, coming back to the 18 SMA and eventually the down channel that we fell through. So let's just remove that so we don't have too much noise. I did not draw a channel from the bottom, which is from here. Let's move that out of the way. One from here up to here. It's a little bit wider cone, but we know this channel is no longer valid. We're going to remove it. And that's the NASDAQ 100. And this one is no longer valid. Remove drawing. And if you notice between these two channels, if we grab this area here, that would be our midpoint between this one and this one on the cone coming back to this area. Okay, let's take a look at the ES, which is the Fortune 500 company. And this is the Fortune 500 company. Remember, we had these two channels, we had these two minors. These are no longer valid. I'm going to zoom in and show you why. These two are already being retested and redone between those two other older channels. Remove drawing. And we're going to remove this one here. I can keep the one on the top if we have to, but that's fine for now. If you notice, between this channel and this channel, we came back and retested the breakdown of this one, and we closed right above it. Where did we come down to? A little bit below the 200 SMA, retested this area in the overnight, came back and broke above the 28.23 and continued higher in the last 4 days, all the way up on Thursday to hit the 50, and then Friday we consolidated an inside day of the range. The 2900 is very critical because it's a mental. We tested, we went back and forth between the 61 and the 50% Fibonacci, and we closed right in the middle of that range on the bullish side. The 2903, 2908 is going to be very critical. If we come back below this area, you look for the 38.2 to support. If it doesn't, we fall back in. But if we continue and clear the 50 simple moving average, the 61.8, look for the retracement of the 61.69 where we fell from, because we tested this up and came back through, and we fell through that 68 area. If you notice, that open was 29.70 and a quarter, and we fell through. We filled the 29.55 quarter. Remember, we had that 55 gap, 55 half. So we filled that gap. We fell through. We marked these ones. We went way more than the 116 SMA and the channel. We came to the 200. When the NASDAQ hit the 200 SMA and the ES hit the 200 SMA, the ES went a little lower, and we bounced back up 50% of the fib, hitting the 61.8. Let's see what next week holds for us, and let's look at it on a weekly chart so that way you guys can see, and we'll break down all the rest of the instruments. This is the weekly chart. If I zoom in here, you can see that nice hammer. We're sitting above the 18 SMA, and we hit the 50 and bounced back halfway. Because remember that 3029 to the bottom of this one, that's more than 200 points. We came down and came back halfway. So let's go look at the GC, which is gold. And on Twitter, I believe it's either Wednesday or Tuesday, I said 1508 is going to be very critical on retracement of gold to come back, get a little bit of rest, go a little bit below, and come back up. Be careful if we do close below the 1508, and I mentioned it on Twitter. You can go look at my Twitter feed. It's Chrisi Farah, so you guys know what it is. So this is where we hit. We came back to the upside channel. We cleared the 15, from the 13. We were looking, you remember, at the 1370, the 16, the 1275, 1300. We said we can go up to 1400. 1414 was my line in the sand, and we continued higher to the 1500. We went a little bit above the expected push high. Now it's going to consolidate and rest in order to continue higher or fall back for a reset before continuing. And here's on the daily chart how it looks like. So remember, I'm not biased anymore to being super bullish, because we had moved, from the 50 SMA from 14 to 1500. That's more than 100 point. Usually you need a relief to the 18 SMA on the daily to get some support where we broke out of in order to continue higher. This was the break out of that channel, or you can do one this way from this point to this one. It should be about the same. So that's gold. Let's take a look at CL. CL, unfortunately, I wasn't looking at it that morning on Wednesday. I did not notice we hit the exact support, which is this line here, the 23.8. If you notice this candle here, that's the low 50.60. This candle is 50.72. This candle is 50.52. And you had one from here at the same time, which was 50.38. This was, the prior consolidation to push higher after we made that round turn, went high, came back in, retested the backside of it. We bounced back up, came back down to where prior support, that was the 23.8 on the longer time range on the daily, and we bounced back where to the ADX DMI, the 5475, which I kept telling everybody we're supposed to hold in order to continue higher. That was the 5885 here, and we bounced back to the upside of the channel. We failed because of the tariff in Middle East on Iran, the noise that's happening and the sanctions, the vessel that got stopped out for the British, and South Korea is as well in Iran waters, I mean in the Middle East area, protecting their ships and their vessels at the same time, like the Americans are at the same area too, and the British are doing the same. So in order that way we don't end up having problem with oil. This is why we had that push down and currency war, and we got pushed back up to the 38.2 Fib. In order to continue higher, we have to clear 50, let's call it 54, 85, 55 area in order to continue back up to the 61.8 and eventually the upside of the 58, 59 area. If we cannot clear that 55 area, we come back and fall. Everybody's bearish. Remember, you have a midpoint here. Where's your channel support? If we come back in this area, this is an oval. I'm going to put an oval. You see this here? We can duplicate it. We're going to remove this one. We're going to duplicate it on the other side. We'll keep that there as a mid-range, and the up target, we'll put it on the other end. So this is the oval. We're going to put it right here. And we're going to remove that one, the oval. Remove oval. And we're going to put the oval right in this area. So it's a similar situation that we are looking for. Either it's going to be the upside of the 116 SMA, the 58, 50 to 80 area, and the downside would be about the 48, 48.50 backside of that, middle of this range in this channel, because if it comes back down and breaks these supports, it's not going to hold that 51 area, it's going to fall through. So that's oil. Let's take a look at the VIX, VX. This is the VIX on the daily chart. Whoa, what just happened here? Why did it do that? Hold on. Oh, look at this. We had a bad candle coming all the way down to zero because of the noise that happened on the daily chart. Let's go to the weekly. Does it show it too? Oh, then we can use the VIX if that's a problem. I don't have to. See, this is an error on the exchanges. This is a fat finger. Somebody made an error here, and this is why it shows up. Let's go to the daily. Are we going to go, instead of VIX, we're going to go VIX, the ETF of it. It shouldn't have it. Okay, the VIX doesn't have it. So if you look at it, because of the fear gauge, we ran sharply up. We hit the 24 area, which was the consolidation in this area. That's where we went double the distance, came back through, fell. Last time we had the fear gauge spike, we got to the 23, and eventually we fell back through. And if you notice on the daily chart, where did we fall through? We went up above, we cleared the 24, and eventually retested it on Thursday, couldn't hold it. We fell through, we cleared the 38% or the 61, vice versa. It depends how you draw it, if this is support or resistance or vice versa. And your support should be the 1670 area, and you're holding the 200 SMA on the daily. Is that 200 gonna hold, or is it the 18 or the 50 SMA in order to continue back up, or we fall back through? So remember that 1670 is very critical area in the VIX gauge in order to continue bullish, and the market tends to go south. Keep an eye on it. Okay, let's take a look at a couple of instruments. AAPL. AAPL, from the earning report, we fell down, came back and filled the gap because the noise in the tariff. We came back to the 38.2. Is this going to continue, hold the 50 SMA to clear the 18 and come back to the 61? If it cannot clear this, comes back in. Let's take a look at Amazon. Oops. Amazon filled the gap. The 1825 is very critical. Has to clear in order to continue higher. And keep an eye on the, I don't want to sound bullish or bearish. If we fall through the 61.8, your first bet is the 1672, and the third one would be the 38.2, that 50% fib, that 1670, 1700. Keep an eye on it. If it holds, that, if it doesn't, look for the 1600 in order to go back up. And if this continues and clears it, and we are bullish, we come back, to fill part of this gap, the 50% fib and the 50 SMA. Amazon. Let's take a look at Facebook. Just running through a couple that way you guys can see. Facebook still in an up channel from the earning report. It fell through but came back, filled the gap. It's between the 50 and the 116 SMA. In order to continue, you have to clear the 38.50, come back to the 18 SMA, and continue back to the 61.8, which is around the 198.50, 200 in order to be bullish. If it falls through this area, the 182 this time, the 116 may not hold it, or the support at 180, it'll come back to the 170, and that's where you're going to look, 170, 171 area, see if you can get a little bit of support and get a bounce back. Remember, I marked this gap fill. Here's your gap fill on the box that we mentioned a couple of weeks ago, and even in the last week video. Let's take a look at CMG. I don't talk about it that much, but I'm going to talk about CMG because everybody was very bearish on it because of that prior high, and it fell through. And I kept telling everybody, hey, if it is above 785, be careful of it. 785 is going to be critical. If it holds, it U-turns. What did it do on the daily chart? It is holding the 18 SMA and eventually gapped up on Thursday, Friday, hurting everybody, almost hitting the up channel from prior before. And if you notice, we do have a higher target on CMG at 935. Does not have to happen. We can come back, reset to the 50 simple moving average and the 38.2 fib before continuing higher. Remember, I'm just trying to show things technically, not being biased to one side. So the 784 is very critical on CMG. Let's go to Google. Google filled, this is the earning report, pushed up, came back down, came back below that box that I had mentioned. I said this is the consolidation. They fell through. We hit the channel, bounced back up, filled part of the gap. Google has to stay above 1200 or 1195 in order to continue higher, to come back to the 224 and continue higher. If it falls through, look for the 38 for 1150, which is 1150 in order to continue higher. Let's take a look at Netflix, NFLX. Netflix, it's in the consolidation 300 area because this was the prior consolidation where we fell through and we broke up. That's in order to Netflix to continue higher, we have to clear the 1330 in order to continue higher. See this consolidation here? We have to get through this area here. 1, 2, 3, 4, 5, 6, 7, 8 in order to go back up to the 38 and the 200 SMA. If it stays in this area, I think, the backside eventually where the consolidation in this gap here, this is where it is. And I left it on the daily chart as is. Let's go back and take a look at one more instrument to understand where we're at, ES. This is the Fortune 500 company on the daily chart. I didn't use any ETFs this week because I don't want to make the video too long. What I want to do is go from the style that we have. Instead of using the candles, we're going to go to the monkey bars on a daily chart to show, hey, what's going on here in the candles. Okay, let's go back. I'm going to zoom into a daily first. This is the value area high, value area low, and this is the most sentiment on the POX. In the shadow here, that's value area high, value area low in the volume profile, and that's where the POX settled. But this is where price action most. The same thing here, value area high, value area low for this year, but where the POC is, right in the middle of the 1900, that's where most people think that there's value. That 1900 is very critical, or 28.98 quarter. If we fall through it, we're going to become back bearish. If we continue higher, we're still closing above that 29.08 area, 29.02, I think still bullish. to refill the gap in the tariff. That 29.68.61 is going to be very critical in order to continue higher. If we cannot hold it and we fall through that 28.23 where we got a nice bounce off last week, we can fall through it and come back down to the 27.47 area. So this is very important for people to understand. I'm not biased on any side. I trade what I see. This is the volume profile, and if I do break it down to a 4-hour chart, it's going to give me a total different view. Let's just zoom in a little bit down, and I want to show you something here because most people are not going to see it. This is the prior consolidation breakup, coming back to that consolidation where we broke up and continued higher. We came back and retested this area, went higher, and eventually fell through. Right now we are in the middle of this consolidation, if you noticed, which is this one here, and this one here. In order to continue, we have to stay above the 29.78, 29.80 in order for the bulls to take control and push it. If this is going to be rejection, if you take the distance from here to here, high and low, we're halfway. In order to continue, you need to clear this area here, or it becomes resistance. We fall through. If this holds the 2900 or 28.88 or 80 and go back up, good for the bulls. If not, watch your hands, and we'll show it on a little faster time frame, the volume profile on a 78-minute. Let me zoom in and zoom out so you guys can see it. Remember, this was a consolidation for a week or so, and eventually we fell on the interest rate from Federal Reserve Powell announcing on Wednesday, the week before, interest rates going to be decreased by a quarter basis point, eventually maybe half a point. We fell through, and Trump, in the China tariff wars is causing that reaction, dragged us down. We came back to that 28.23, 28.05, and eventually bounced back up to the 29. If you look at this high here, what was the high? 29.40.75. That's a great area we came back to, but we still closed above the consolidation of the 2900, which is between the highs and lows. So keep an eye if we continue above the 28.98, 2900 mental to continue higher back to the 29.82, 88 area in order to become bullish. If not, we may lose this area because this is a virgin control POC. This is a VPOC which we retested on Thursday. We came into it. This is no longer valid, so we have one virgin control, two virgin controls, three virgin controls up the top, which are never being revisited, and the low, we've got one and a couple more down the bottom because we took out the other ones. So I hope this was helpful. I look forward to everybody, seeing you at SolsticeATR and Vulcan Capital Research. We're here to assist you in your active swing trading. Please do like this video. Check if you like it, not put your comments on. And check us out at SolsticeATR and Discord in order to get you signed up. Enjoy your day. Have a great weekend. Look forward to seeing you on Monday. Everyone, take care.